Good morning. Welcome to the program Gyan Se Kalyan. Myself, Dr. Baidyanath Ram Prajapati, Associate Professor. My dear friend, here we are going to discuss the basics of accounting with the help of terms used, and we will take the small question and their answer to understand the fundamentals of accounting. This is very important for all accounting fields. So here the first term is account. What does it mean? So financial records of an organization that registers all financial transactions are called account. So here the example is cash account, sale account, receivable account, debtor account, plant account, etc. The second very important term is accounting. What does it mean? It means process of identifying, measuring, reporting of financial information of an entity, which has called the language of accounting. So accounting is also called the language of a business because we are collecting the various information of business and we are passing it to the users. So my dear friend, as we all know, we are conveying our messages, we are discussing, talking with each other with the help of language. Either this will be Hindi, English or regional language. So the basic purpose of language is to communicate the information, the messages. So accounting conveys the message of business. So here example, Ram start business with capital rupees 1 lakh. So here there are two accounts involved. First cash and the second one is capital, which is introduced by the businessman. Another very important question in case of accounting is what is accounting cycle? A term that describes the steps when processing transactions like analyzing, journalizing, posting, preparing trial balance, adjusting, preparation of financial statement like preparation of trading account, profit and loss account, balance sheet, cash flow statement, ratio, etc. So here a very small example is given with the help of accounting equation, that is assets is equal to liability plus equity or capital plus liability. So my dear friend, this cycle always goes on time and again. When there is transactions, we are repeating this transactions. So next one are what are the different steps in accounting cycles? So there are 9 steps here. The first one is collection and analysis of data, or that is called business transactions and events. Then putting transactions into the general ledger. So there are rule or golden rules of passing journal entry for the personal account, debit the receiver and credit the giver. For real account, debit what comes in, credit what goes out, and in nominal account, debit all expenses and losses and credit all incomes and gains. So my dear friend, we are proceeding to the third step, that is posting. When passing journal entry, we are summarizing it in the ledger. The process is called posting, from taking the entries from the journal to ledger. And preparation of an unadjusted trial balance, then we are making some adjustment and preparing the adjusted trial balance. After then, we are preparing the closing of entries, making closing entries and preparing closing trial balance. With the help of that, we are preparing trading account, profit and loss account, and balance sheet. Next, very important question, what is accounting equation? Very important. Like in our life, we are facing various types of happiness and sorrow. So that equates. Our life is equal, or it is the sum of happiness and sorrow. Likewise, in case of accounting, there is debit must be equal to credit and the plus must be equal to minus. So there is a negative side, there is positive side, that must be equal. So the debit be equal to credit, or assets is equal to liability plus capital, is called accounting equations. Next very important questions. What is accounting principles? So there are general rules and concept that governs the accounting recording. So these general rules referred to as basic accounting principles and guidelines. These forms the background and the groundwork on which more detailed, complicated and legalistic accounting rules are based. So without rules, without principles, so like the life, without our motive, without our objective of the life, it will be useless. So likewise in accounting, there is some rules, guidelines and the thumb principles. So the standard rules, guidelines and industry specific requirement for financial reporting is called principles, and this is also known as generally accepted accounting principles, that is GAAP. Next very important term is creditors. Creditors are the person and the other entity who have to be paid by an enterprise an amount for providing the enterprise goods and services on credit. So when we are purchasing anything on credit, the person from whom we bought is called creditors. The debtor to whom we have sold the goods and services provided is called debtor. The person who got the services and goods from us on credit is called debtor. And next is stock, the remaining item. Either this may be raw material, finished goods, semi-finished goods, or the goods in hand is called stock in hand. Next, purchases. Purchases are the total amount of goods procured by the business on credit or on cash for converting it into output for the purpose of selling. Next very important terms, drawings. So the personal use amount personally used by the proprietor is called drawing. What is goods? It refers to the product of which the business unit is dealing. So when we are converting inputs, raw material into output, that becomes the goods. And this is meant for sale. Next term is voucher. The documentary evidence in support of a transaction is known as voucher. For example, if we buy goods on cash, a cash memo. When we depositing in bank, there is a pay in slip. Next term is discount. Discount is the deduction in the price of the goods sold. So there are two types of the discount. For attracting the payment, we are giving the cash discount, and for attracting the more sale, we are giving trade discount. So trade discount is directly deducted from the invoice and that is not recorded, but the cash discount is recorded in the books. Next very important terms, capital. Amount invested by the owner is called capital. So it may be either in cash or in the form of assets, like if someone is providing land or building to the business, that will be capital. So next term is sales. Sales are the total revenues from goods and services sold, or the services provided to the customer. It may be either in cash or on credit. Next one is the revenues, very important term. These are the amount of business earned by selling its product or providing services to the customer, called sales revenue. Expenses, what does it mean? Cost incurred by the business in the process of earning revenue are known as expenses. So my dear friend, remember these all the terms, very, very important. So these all are the fundamentals for accounting. Next, meaning of accounting. Accounting, what is it? Is art or science? So accounting as the art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of financial characters and interpreting the result thereof. So this definition is given by American Accounting Association. And what are the main aspects of definition? So here we can analyze the definition. So by analyzing, we are getting that there is an economic event, or we can say the transactions which can be measured in terms of money. Next one is identification, measurement, recording and communication. Third, this is done for a specific organization, and there are some users who are interested in the information. That they may be the owner, manager, creditor, banker, government or researcher. So the owner of the shareholder, the creditor, director, creditors, prospective investors, government and regulatories. So these all require financial information, and we are getting it from the financial record. So who are the external users of the business information? So here the investors or the potential investors, union and employees group, lenders and the financial institutions, competitors, suppliers and creditors, customers, government and the society as a whole. Next, what is the role of an accountant? So there is a very important role played by an accountant. The accountant observes, screens and recognizes events and transactions. He measures the process and process them, compile report comprising accounting information, and he communicates to the users. They are then interpreted, decoded and used by the management and other groups. Next very important term, what is expenditure? Spending money or incurring a liability for some benefit, services or property received is called expenditure. Purchase of goods, purchase of machinery, purchase of furniture are the examples. Next term is profit. What does mean profit? The excess of revenue over expenditure is called profit. What is financial accounting, or what are the different disciplines within the accounting discipline? So my dear friend, earlier only one set, or we may say when business is small, transaction are small, all the transactions can be recorded in a single book, that is called financial accounting. So as the business grows, volume of transactions rises, then this is subdivided into different parts for the different purposes like cost accounting, management accounting. So these all are the parts of financial accounting. In cost accounting, we are recording for ascertaining the cost of various products manufactured by the firm. In management accounting, we are getting information for the purpose of decision making, planning and controlling. Next very important term is reliability. So this is the part of accounting principles. What does reliability means? Reliability means the user must be able to depend on the information provided by the process of accounting transactions. Next, what does relevance means? To be relevant means information must be available in time at very little cost. Next, what does understandability means? What does mean? What does it mean? It means decision maker must interpret accounting information in the same sense as it is prepared and conveyed to them. So it must be understood by the users, whoever may be the users. So this must be very simple, and this must be as per the framed rules and the methods. Next term is comparability. Financial report are able to compare with the various aspects. It must be compared within the department, other department, within the organization and outside the organization. So to comparable accounting report must belong to common period and use common unit of measurement and format of reporting. So format, unit, period must be common so that it can be used and applied. What are the objectives of accounting or role of accounting as an information system? The basic objective of accounting is to provide useful information to the users, external or internal. What is the role? It describes and analyzes a mass of data of an enterprise through measurement, classification, and summarization, and reduces those data into reports and statements which shows the financial conditions and results of operation of that enterprise. My dear friend, so this is all are the process of accounting, and in case of the minimum accounting we have seen measurement, classification and summarization are the main functions of the accounting process. Here a very good question is given. Tick the correct answer which is correct or not. So for self examination, here questions are given. Which of the following is not a business transaction? So here my dear friend, so bought furniture is a business transaction, paid salary is a business transaction, paid son fee for personal bank account, this is not a business transaction. Paid son's fee from business, this is the business transactions. Which is the last step of accounting as a process information? So my dear friend, the answer is communication of information is the last step. And here question answers are, we are understanding the basic concept of accounting with the help of question answer. So what are assets? So these are the resources or thing of value that are owned by the company. Here the examples are cash, account receivable, inventory, building, plant, machinery, etc. Next question is, what is gross profit? Gross profit means net sale minus cost of goods sold. So in trading account we are getting the gross profit. In credit side we are showing sales and the closing stock, and debit side we are writing opening stock, purchases and all direct expenses. If the credit side is more we are getting gross profit. If debit side is more we are getting the gross loss. So another very important question, what is accounting period? My dear friend, we are measuring the business performance and growth. So for that purpose we are dividing whole life of the business into different segment and different part, say 1 year. Basically accounting is prepared for a particular year, or we can say accounting period means a period of time such that 12 months. It may start from April to 31st of the March. What are revenue expenses? So the amount earned through the sale of goods and the providing services are called revenue. And the revenue expenses, these include the cost of goods sold, selling, distribution, and administration expenses, and interest expenses. So earning the revenue, whatever the expenditure we are incurring, that is called expenses. Next, what are sales? Sales refer to revenue earned when a company sells its goods, product, or merchandise. What is T accounting? My dear friend, earlier we had some ledger. We are summarizing the accounts in the form of ledger. So in case of the ledger, there are two sides, debit side and credit side. That is called T shape of accounting, because in the right hand side we are writing the credit, and in the left side we are giving the debit. So it helps in visualizing the effect of recording a debit and credit amount, resulting balance of general ledger. Now come to the next part. What are the golden rule of journal entry? Earlier I have already discussed. In personal account we are dividing the all the account in three parts. Personal account where the persons are involved like Ram, Syam, Mohan. So under this, debit the receiver and credit the giver. Real account, debit what comes in and credit what goes out. It includes the all assets like land, building, plant, machinery, cash, bank, etc. Nominal account, debit all expenses and losses and credit all incomes and gains. So in nominal account, we are recording all the expenditure and incomes. Now here, very important, what is bookkeeping? So prior to the computer software, in case of manual, so the bookkeeping for small businesses usually begin writing entries into the journal. So bookkeeping is the fundamental. Here the recording of basic transactions are done. What is journal? It is defined as the books of original entry in order to reduce the amount of writing in general ledger. What is a special journal? Day books. And what is the subsidiary book? When there are volume of transactions, to reduce the load of cash book and journal, we are dividing or we are using different accounts, different ledgers, different books. Like for recording this credit sale, sale book is maintained. For recording credit purchase, purchase book is maintained. For bill receivable book. For bills payable book. Likewise, sales returns, purchase returns, books are maintained. So basic purpose is to reduce the burden of main book. Next, what is accounting? Accounting is the process of recording, summarizing financial information in a useful way. What is direct expenses? Expenses connected with purchase of goods are known as direct expenses, or it is also used for converting the raw material into output. Here some examples are given: freight, insurance, carriage inward, wages, custom duty, octroi duty, etc. Now it is time to understand what is balance sheet. It is an statement of assets and liabilities, and it is prepared to show the financial position of a business at a particular date. What are indirect expenses which are not directly involved in the production process are called indirect expenses, such as rent of building, salary to employee, legal charges, insurance, printing charges, etc. What is net profit or loss? Net profit is equal to gross profit minus all indirect expenses. So for this, we are preparing the profit and loss account. In credit side, gross profit and all the indirect incomes are taken, and in the debit side, all the indirect expenses like salary, rent, printing expenses, advertising are written. When credit side is more, it is net profit. When debit side is more, it is net loss. What is real assets? assets which have some market value and which can be touch, feel like building, machinery, stock, debtor, goodwill, etc. What is fixed assets? Usually real assets are the fixed assets which have long life and bought for long period of time and used for the production purposes are called the fixed assets. These are not meant for resale like building, plant, machinery, etc. Tangible assets and intangible assets, there are two categories of fixed assets. It is tangible, it can be seen, it can be touched, which have the physical shape like building, plant, machinery. What are intangible assets? Which cannot be seen, not be touched. There is no physical existence. It is only felt like goodwill, patent right, copyright, etc. Next very important term is fictitious assets. What do you mean by it? Assets which have no market value are called fictitious assets like preliminary expenses, loss on issue of share, discount on issue of debenture, etc. Fixed or long-term liabilities. So these liabilities are payable after long period of time like debenture, loan, on mortgage, etc. What is business event? A business event is also called business transaction. Is an exchange of value between two different groups or it is the business transaction like sale, purchase, etc. What are current or short-term liabilities? These liabilities are payable within a very short period, say within a year, like creditors, bill payable, etc. What are deferred liabilities? Debt which are repayable in the course of less than 1 year, but more than 1 month are called deferred liability, say short-term loans. Liquid or quick liability, debts which are repayable within a course of month are called liquid or quick liability. Bank overdraft, outstanding expenses, creditor, etc. are the examples. What is journal entry? Journalizing is the first step in the business cycle. Expenses are the cost incurred to general revenue. What is double entry accounting? Double entry accounting also called double entry bookkeeping. So here we are making two accounts or recording two sides. So my dear friend, every debit is recorded must be matched with the credit. Term used in accounting we are discussing. Next term is operating expenses. So it includes all costs incurred to generate operating revenue like sales. Here are the example: rent, wages, advertising. So these all are the expenditure. Non-operating expenses includes that cannot be linked back to operating revenue like interest expenses is the good example. What is revenue account? It is the account in which we are recording all the sales or revenue, either that is cash or on credit. Here sales, rent received, consumer consulting services are the examples of the revenue account. Next one is non-revenue or other income. So interest income is the example. What is accounting equation? So this is the foundation of accounting. Here there are two sides. Debit is equal to credit or capital plus liability is equal to asset.